Thank you, CA Biswaranjan Suttar. With this, we now come to the closure of this special felicitation session. I thank all the elected members for joining us today. We'll immediately start with the next technical session. Thank you. Nipun Mehta sir to kindly grace the dais. I request everyone to kindly give a huge round of applause. And I request CA Prithviranjan Padi to kindly accompany him. I would like to introduce CA Nipun Mehta. CA Nipun Mehta is an investor, mentor and independent director. He is a fellow member of the Institute of Chartered Accountants of India and a distinguished professional of the Indian financial services industry and the capital market. He has over 40 years of proven leadership experience across global and domestic institutions like Edluis Group, ILFS and across capital markets, both primary and secondary, private banking and wealth management. He is the founder and CEO of Blue Ocean Capital, a family office. Nipun's last assignment was as Executive Director and India Head, Society General Private Banking. He has earned global recognition as the Global Outstanding Young Private Banker for his work as Societe Generale, who spanned across geographies and across asset classes. Nipun has also played a key role in formulating regulatory policies for the Indian capital markets by being a part of the advisory committees set up by SEBI. Known for his ability to read corporate and economic trends and a deep understanding of the capital markets, he is frequently invited for his views on TV channels and by global newswire agencies, and is a highly respected face on business television. He is a popular speaker at the ICAI, IIMs and business schools. He also sits on the boards of the listed and unlisted companies as an independent director. With this, I introduce CA Nipun Mehta and I request CA Prithviranjan Padi sir to welcome him with a flower sampling. With a sapling, sorry. I request everyone to kindly give a huge round of applause. Without much delay, I will now like to invite CA Nipun Mehta sir to deliver his address.
Well, good afternoon, everybody. At the outset, I must thank Central Council members if they are here, or the EIRC office bearers, and of course, the Bhubaneswar branch chairman Mahendra Sahuji, for giving me an opportunity to share my thoughts and inviting me to Bhubaneswar. As an introductory greeting again, Jai Jagannath. So I think we had, since morning, some wonderful sessions, so wonderful act that I need to live up to. Us being chartered accountants and being defined as very serious and sometimes even boring people, let me just lighten up things. How many of you go and watch movies? Everybody, great. How many of you have seen Mufasa, the Lion King? Great, quite a few of you. It's from movies like these that you actually get to learn so much about our lives or about our profession. Let me tell you how. So in the movie, there's a small cub that is there, lion cub that is there, who suddenly discovers himself as he grows up a little, and then suddenly loses himself in the jungle. Now, he loses himself when he's just realized that a small part of the jungle is where he lives, and that's the whole world. He suddenly gets lost, goes to some other part of the world in a very large jungle where there are hundreds of lions, and he's grown up only seeing his dad and mom as lion and the lioness, and very few lions around, and he thinks that's the whole world. And when he goes to the large jungle and sees so many lions, which is when he realizes that the whole world is significantly larger than what I thought. A lot of times with us CAs, and particularly when we are fresh and we've actually passed the CA exam, passed the final exam, and we become chartered accountants, become members, we feel we've achieved everything that is there to be achieved in life. I think what's the life after that is what makes us realize that there's a whole big world out there in terms of opportunity, in terms of ability to create skill sets, to create specialization, and for us to grow in life. I think that's where we need to think and change our mindset. And when I heard Jaiba in the morning, I think that was extremely encouraging to see how it was lapped up by a lot of the younger generation. Excellent talk. And I think that's where we, all of us as members in practice, and I'm told most of the people here, most of the delegates here are members in practice. Most of us in practice need to know and understand that there's a really big, not bad, but a seriously interesting and opportunistic world out there, which we can actually grow up to learn and specialize in, and become a star in a different world altogether. Let me maybe again share another anecdote. All of us have heard of Albert Einstein. Albert Einstein was once traveling in a train, and those were the 1920s and 30s. He had already become famous by then. So he was traveling by train. A ticket checker came and said, "Sir, can I see your ticket?" And everybody showed their ticket. Albert looked around desperately, looking at all his pockets. He couldn't find in the shirt, in the trousers. He couldn't find the ticket. The ticket checker said, "Fine, don't worry, sir. I'll check in the other compartments and then come back." So Albert is checking all around. He still can't find the ticket. The ticket conductor goes in another compartment, comes back in 15 minutes, and our guy is still desperately looking. The ticket checker says, "Mr. Einstein, all of us know who you are. You don't need to introduce ourselves. It's okay. It's absolutely fine if you don't have the ticket." And Albert, as frustrated he got trying to find the ticket, tells the conductor, "Oh, you don't need to tell me who I am. Even I know who I am. What I need to find out from my ticket is, where am I traveling?" Now, that is exactly what all of us as members in practice also need to think through and decide where exactly we are going. It's very easy to come out of practice and say, "Okay, I'm going to do," to be in your comfort zone and to say, "Okay, I did my articleship in taxation, I did my articleship in audit, and I'm going to start that as practice." That's the comfort zone that we are in. Can we get out of that comfort zone and create a specialization for ourselves, train ourselves differently, and get into something more than just the regular practice opportunities that are there? I think that is what we need to look at. And I can tell you, I'll share with you thoughts on the capital market and the opportunities there. I think it's a huge world in financial services in the capital market out there where we can participate. It is so large that I'm sure all members here and in the whole of Bhubaneswar and in the whole of the eastern region can actually take that opportunity, and still there will be more opportunities left after everybody is fully occupied. So let me also just get a feel around how many of us have opened DMAT and broking accounts in the last 5 years after COVID? Quite a few, interesting. How many of us have registered with all these online broking portals, Grow and Zerodha and all of these? Again, quite a few, which means a lot of guys probably seem to be also doing trading. Is that right? So what we tend to do as chartered accountants is, once we want to participate in capital markets, we follow our comfort zone, we follow into the easiest thing that probably comes to us. which is probably trading. Well, I think I must tell you, and the next best probably could be maybe for those who did some trading, lost money, forcibly became investors because you had to take delivery of a lot of the shares in which you were losing money, become investors, and that's the only low-hanging fruit that comes about, saying that, okay, I'll do trading or I'll do investment. But that's the low-hanging fruit. That's the comfort zone that we are in. I think when we want to participate in capital markets, let me take you through all the opportunities that are there where you can actually benefit out of practicing there or even participating in different roles. So, of course, we have all of us chartered accountants playing a vital role of financial integrity and compliance. You marry that with what the capital market requires, and it's a place which is driving economic growth for India. It's the place which raises capital for India. It's the place which raises both equity and debt for India. So I think it's the engine for growth for the economy, for the entire corporate space that is there, just like what banking does in terms of lending. Capital market facilitates a lot of that. So I think when you marry a chartered accountant in practice and the skill sets and the abilities that he's got with the largest marketplace that is there around, I think you have a great opportunity that gets created. These are basically broad statistics where we say, okay, you have a large equity and debt market, and let me tell you, the equity market in India is large, the debt market is not. The debt market is significantly larger in developed economies. In the US, you probably will see a large part of that debt market coming in India as well gradually. We have a total market size of about 411 lakh crores, which is about $4.8 trillion, that is in dollar terms. All of us keep tracking our stock prices, individual stock prices, but we also need to obviously keep tracking what is the overall market size and the market opportunity. And of course, all the participants there are retail investors, institutional investors, and foreign investors. In the capital market, you have both the investors who are suppliers of capital. So let's look at it from a different point of view as far as what the capital market is. You have both suppliers of capital and you have issuers of securities. So you have borrowers and you have investors. And you have various categories in that. You'll have borrowers, which are businesses, which are companies, which are raising capital. You have the government. You have individuals who are raising loans. Now, all of this, I mean, we participate in different ways. We could participate as investors, as individuals. I think the way a lot of us sometimes participate is trying to raise funds for companies. You might do project funding. You might go to banks where you might try and raise funds from banks or from private equity, from private investors, from HNIs, from family offices. That's again probably the low-hanging fruit when you look at participating in the capital market is concerned. The opportunity size there is significantly larger and lot more processized, lot more institutionalized. Let me tell you, there are organizations which, again, they gradually become institutions, but as Jayabha was saying also in the morning, it's not just about us individuals. It's about a team. Can we, if we don't have the skill sets, can we get a team which does a lot of these activities? It is not just about equity, it is about debt. It's not just about investing, it's about fundraising. It's just not about within debt, not just about raising capital for some small entity or small organization. It's about investing in debt. You could invest in bonds. You could actually do intermediation in bonds. You could raise capital for significantly larger companies. You could go to various entities. It's not just the banks, to different kinds of entities, to different kinds of funds which have special focus on, it could be real estate, it could be focus on different industries, it could be in pharmaceuticals, it could be fundraising for different industries. You could what typically happens to me when I meet the younger generation CAs who are there, who've just about passed, And when you ask, what would you like to do? And this probably goes across a lot of CAs who've not just passed afresh, but even gone a little ahead in practice. What would you like to do in the capital market? And the one answer that I tend to get sometimes, beside of course wanting to trade and invest and all of that, is to do investment banking. And when the next follow-up question is there, what do you think is investment banking and what do you want to do in investment banking? We are lost. We are lost for what exactly investment banking is, what fundraising for equity and debt is, what fundraising for special projects is, what fundraising for alternate investment funds is. This capital market is so significantly large, and in the last 5 years has grown to such an extent. We have this market capitalization, which we counted as 411 lakh crores, was about 1 lakh crores 5 years back, just around COVID. When you look at the mutual fund industry, that was about 15 lakh crores just before COVID. Today we are at 65 lakh crores. It's become 4.5x. When you look at the AIF industry, for those who know about AIFs, I'll cover it very briefly. It started about 12 years back. Fundraising started about 10 years back. We're at about 10 lakh crores of we are at 10 lakh crores of funds committed and 4 lakh crores of funds invested that are there. This industry is so large. We'll look at the PMS industry, portfolio management. Portfolio management is close to about 33 lakh crores today. A few years back, it was barely 5 or 7 lakh crores that was there. It's grown significantly. This opportunity size, look at the number of IPOs that have come. India, for all of you who track the IPO market, was the largest fundraiser, single largest fundraiser worldwide in terms of the amount raised or the number of IPOs in 2024. I'm just trying to communicate the size of the opportunity that we could be missing out on by not participating in it, not as investors, not as traders, but as intermediaries who can actually help either do a fundraise or do a lot of the audit and compliance work. So when I come to AIFs, let's take an example now. Let's say the AIF work, alternate investment funds. How many of you have heard about alternate investment funds? Yeah, a few, probably very few. As CAs, I would have thought a lot more would know. Alternate investment funds are, so there's an investment category of mutual funds, which probably I'm sure all of you invest in, which has no minimum amount. There is a category above that, which is portfolio management services, which takes a minimum investment of 50 lakhs from investors. The mutual fund has no limit. This has a 50 lakh limit. And alternate investment funds are for evolved investors who understand the capital market, and the minimum amount investable there is 1 crore and above. When the regulations came and when the industry started, it started off with 5 or 10 AIFs that got registered with SEBI. Today, there are close to 1395 AIFs that are registered. Now, all of this business of AIFs, and all AIFs need tax advisors, they need a lot of tax compliance, they need a lot of tax certification that is there. All of it is concentrated, the 80% of the business is concentrated around just 5 or 6 firms. Now, that was an opportunity which was there for everybody. When the regulations came, every single chartered accountant, whether in Bhubaneswar or in Mumbai or in Delhi or in India, had the opportunity of starting to take up a new product and say, okay, I'm going to be participating here in terms of tax advice. So we are not talking only about investing. In the capital market, exactly as what we practice is something which is required even in the capital market. They need tax advice, they need tax certification, they need a lot of tax compliance to be done, and all of us can, this is when a new opportunity opens up, it is open to all of us. It is not just the big four or the larger firms for whom it is available. It is available for all of us as long as we've acquired the skill sets. So, as and when newer products come, the sheer size of the capital market and the amount of fundraise, the kind of wealth that has been created, opens up huge opportunities for us as practicing chartered accountants. Please do keep that in mind, because I'm really seeing that missing when we've started a fund, an alternate investment fund, and when I go around asking a lot of CA firms saying, okay, I need a tax advisor, would you be able to do that for me? And I have to look around asking 5 different, 10 different firms before one person comes up and says, yes, we do it. So similarly, there are several new products. There are for any of you who've heard of, have you heard of SIFs? Anybody? SIFs are the latest new product that SEBI has announced called specialized investment funds. Now, these funds are different category, can have different strategies that will be there, investment strategies. The minimum amount is 10 lakhs, so the SEBI wanted to have something between a portfolio management and a mutual fund, so they've come out with specialized investment funds. Again, there's a huge opportunity out there for people who want to practice, and it's not just about being in Bhubaneswar where there may or may not be opportunities. You can do work with firms all across the country. It's not just about having a localized practice that is there. So as and when newer products come in within the capital market, I think it will be a huge opportunity for each of us to participate. So whether you are participating as any form of investor or as borrower, I think there is an opportunity. I was talking of the size of the capital market. Look at the sheer difference. We have been talking about figures. 5 years back, before COVID, we were significantly lower at about, like I said, 1 lakh crores. Today we are 4 times that figure. The annual turnover on NSE is significantly higher. All of this does require a lot of CAs to handhold for a lot of things that might be there. Look at the annual FII investments that is there. I mean, opportunity size. What I'm talking about here is the sheer inflow of wealth that is coming on into India, into the capital market. And that gives us a huge opportunity to be able to participate in the capital market in various forms. And we'll come to how we can do that. We were talking of annual fundraise. In the number of IPOs, we spoke of 2024 on your left, absolute left, where we had 91 IPOs. This is only main board IPOs. We are not talking for SME IPOs here. Look at the SME size. I mean, all of you, for all of you who applied in SME IPOs or who buy or sell some shares in SME IPOs, these are the statistics. I mean, it's that just the SME size that is there. Look at the kind of returns that the SME IPOs have given. You have 27% return, which is the average return since in the last 12 years that SME IPOs have given. Various ways for us to participate in all of this. So what do we do as CAs? We generally will start with trading. We'll probably do a bit of investing. But I think as you go down the list, it becomes more and more interesting. You go to financial advisory services, you have portfolio management, you have investment advisory services. How many of you have heard of a CA by the name of Kresha Gupta? Nobody. So Kresha Gupta was a CA who passed in 2019 as a 20-year-old. At 21, she opened a fund by the name of Chanakya Fund. Today she is 26 years old and she has a 300 crore SME fund. 300 crores is not a small amount. As a 26-year-old, she had the motivation to step out of her comfort zone of having done the regular forms of articleship that were there, stepped into the capital markets, got her a lot of the certification that NSE requires. And believe me, NSE requires a lot of certification, and these exams, some of these exams can be tough even for CAs. In terms of how portfolios are to be valued, how valuation is to be done, how unlisted share companies valuation needs to be done, a lot of the formulas that you got to learn, how you got to learn derivatives. So all of that is something which she stepped out of her comfort zone as a 26-year-old managing a 300 crore fund is amazing. I think for a lot of us, that becomes a benchmark, at least for the younger CAs, that yes, you can and should step out of your comfort zone to see how you can participate in the wealth creation that is happening all around the world, all around the country, and of course around the world, and see how we can participate through that kind of growth. You obviously have market analysis that we can do a lot of market data, AI, we'll cover that on how data analysis can be done. There's a lot of tax compliance and of course a lot of financial planning which we can do for clients. One thing that I've always advised a lot of CA firms to do is, beside practice, I think the important thing is that gets missed out is the kind of relationship that you've built with clients. The trust that the client has in you needs to be extrapolated into doing other financial activities in terms of intermediation that a CA can do. It can be financial planning, it can be wealth management, it can be actually advising them on a lot of investments that are there. That is provided all of us ourselves learn and do and reskill ourselves in terms of how we can invest in the equity markets, in the debt markets, in the global markets, through the gift city. And the opportunity size, I can't stop talking of the kind of opportunities that we can have. Look at, of course, valuations, mergers and acquisitions. See, the important thing in all of this is that business is not going to come to you sitting in the office and saying and hoping that, yeah, there'll be some M&A that will happen and some firm or some company will come to me and say, okay, we are doing an M&A, can you advise us? That happens when you have a lot of gray hair. Other than that, you probably have to go out, meet a lot of people, explain to them your skill sets, and actually make them understand that if you could be damn good at M&A, you could be damn good at valuation, you can be seriously good at advising on takeovers, which could be friendly takeovers, hostile takeovers. Mind you, this is a huge business in the Western world. In India, we've not seen too much of that, but all of that through the financial world onto the financial experts, which is chartered accountants, is coming to India. Please remember that. And that is where the opportunity size actually can be huge. You have, of course, a lot of risk management today. If you look at, for all of you who are on the board of independent directors or on the board of listed companies or unlisted companies, listed particularly, you will realize that a key discussion always in the board meetings is also always risk management. That's one of the key important committees that are there. All companies, in any case, all forms of risk, whether it could be business risk, it could be whatever, reputational risk, it could be finance risk, currency risk, interest rate risk, client risk, customer risk, raw material risk, all of these risks that are apparently there. That's something which, again, as chartered accountants, we can really specialize in and advise a lot of companies. I think it becomes critical for us to, again, in the same point, in terms of reskilling ourselves and understanding having newer and newer skill sets and understanding newer and newer subjects and topics. I was talking of market data analytics. It's such a huge opportunity. I mean, there's data all around which is available at a negligible cost, and you have ways in which you can actually leverage, whether it is through software, whether it is otherwise, through analyzed data and throw out interesting reports which can actually be useful to a lot of clients, a lot of customers. So when again, Jaiva was talking about technology and digital transformation in the morning, and adaptation to it, these were the first thoughts that I had, that yeah, it's a lot of, I mean, look at it, let's say there's a lot of spending happening in India, okay? There's a lot of investment that is happening in India. It's out there for us to actually, and all of that data, like I said, a lot of it is available without cost. But it's for us to digest that, to come out with intelligent reports out of that, saying that if there is a spending data, what is the data of above 20s who's spending so much? What is the data of above 40s which is spending so much? Or what is the data above, what is the data of people spending through loans? What is the data of people spending through credit cards? What's the kind of defaults that are happening? I mean, these are alternate services that each CA firm can give. You just need to build skill sets. And like was said by earlier speakers, it's not just about ourselves building that skill set. It's about a team building that skill set and having that opportunity, the same way in which, let's say, spending data can be analyzed, investment data can be analyzed. How many investors are there for any investment product that is there, whether it is mutual funds, there could be post office savings that are there are PPF accounts there are trading data that of derivative trading, options trading that is there is investment data that is there. How many of these investors are from which state? How many of these investors are from what age group? I must ask you an interesting question here. Are you aware of, so all of you are probably aware of SIPs that are there in mutual funds, right? Are you aware of which state is the largest contributor of SIPs and or demat accounts in India? Good answer. Maharashtra, Gujarat. You might be surprised that it is actually UP. Maharashtra and Gujarat come next. Look at it. I mean, that's a wake-up call for each one of us, saying if when we do a data analytics job of investment data that is there, which state is contributing or which what age group is contributing, what is the minimum application size that is come. Just the way we might probably do it for our own clients in terms of how many clients do we have with an X income for whom we are filing returns, where the income is less than 20 lakhs, income is from 20 to 50 lakhs, income is from 50 lakhs to 1 crore, from how many do we have with our income above 1 crore. Stuff like that. It's that kind of data analytics which actually help us to take, what do we as CEOs do when we are a CEO of either a bank or a mutual fund or any financial intermediary? We're just crunching data. I was at a dinner. I met the chairman of Blackstone some time back, and my question to him was, "What keeps you awake at night? What do you keep thinking?" Obviously, at that level, at the chairman of that large an entity, they're not thinking of day-to-day issues, or they're not thinking of what's going to what's the next business opportunity. They have 20 guys who are employed just to look at those kind of things. The answer that surprised me is twofold. He said, this was a few years back, so at that time social media was becoming seriously big. So he said, what keeps me awake at night is what my competition is doing and how it's working on social media to make itself bigger than me. And from 5 years from now, when AI had, at that time, AI had just about germinated they obviously knew it, we didn't, but he said 5 years from now, I know that AI is going to be keeping me awake at night, saying how is it that it's going to impact my business, whether it is in terms of employment, whether it is in terms of opportunity that I can take benefit of. In the same way, we as CAs doing our practice, we need to understand, think, and realize, introspect about what is keeping us awake at night. Is it just the next income tax return or the tax audit that we're going to complete? Or is it that I want to start thinking of what my vision is for my practice 5 years or 10 years down the line, and can I adapt to newer products and practices which can take my practice to a different level altogether? You got, this amazes me, you know, when you have, it's just not just spending and investment data, tracking of currency, tracking of interest rates, tracking of commodity data, it's huge out there in terms of how much the financial world wants this data. A lot of it is readily available, a lot of it is not. But that's the raw data that's available. Analyzed data is something which we as chartered accountants can actually create, provide, and sell it to them or offer it to them. So you have a lot of these opportunities that come for technology and digital. Of course, there are newer products and geographies that are coming about, which are again, and newer regulations, which bring huge, large number of opportunities for us. So you have Gift City investments in fact, over lunch with Aniket and Jaybai, when I was having lunch, this is precisely what we were talking about, that the kind of opportunity that is there in Gift City and how the government is scaling it up is there for all of us chartered accountants. It's not those who are present in Ahmedabad. It's about all of us chartered accountants to go out there and take that opportunity of all the options that are there in, as far as Gift City is concerned. Of course, we have financial products. We spoke about SIFs, alternate investment funds. You have a lot of venture capital funds. You have a lot of long-short funds. Again, the kind of opportunity in each of these, when you have, whether it is data analytics, whether it is, again, tax certification, tax advisory, there's a private placement memorandum that is there, which needs to be filed with SEBI by all AIFs, by all portfolio management schemes. All of them need chartered accountants to be certifying their products or their information or their data. All of that is really something where we can easily participate in all of these products. And of course, we have the regulatory landscape, which is constantly changing. You have ROC coming out with newer guidelines. You have SEBI coming out with new guidelines. Of course, income tax, I mean, I'm sure you would say, yaar, income tax mein itna changes aa raha hai, uske baad ye sab chodo na, where do I relearn, unlearn after income tax changes after each budget? These are all small things, but these are also opportunities out there when you look at SEBI, ROC, RBI, all of those guidelines that keep changing. This is not something which probably all of you need to know, but yeah, all of us really clearly need to know about the regulatory environment. You need, some of them we already have. You have financial analysis and modeling skills. You have, all of this is critical in each of these activities. Of course, attention to detail and accuracy in reporting. And of course, effective communication skills, which in the morning also speakers spoke about it. Where are we facing challenges? Clearly, I think competition from a lot of freelancers in all of these activities that I spoke about while participating in the capital market is something which is important. These guys not necessarily are qualified, but they start, because they're creative, because they have the motivation to do it, they do a lot of these activities. We obviously need to have complex valuation and reporting requirements. A lot of times conflict of interest, but most important is continuous learning that we need to do. So this is something that I already spoke about, an opportunity. This is just a small example that I was talking about AIFs, about Kresha Gupta and the fund. Of course, that's just, but this is just 2 slides over what an AIF is. I was talking about AIFs and what the minimum capital requirement is. These regulations came out 13 years back in 2012. These are, there used to be, before that, to give you a very, very brief history, there used to be a lot of collective investment schemes that used to be there. You could call them chit funds, you could call them, they were earlier in the form of art funds. There were funds for antiques, there was funds for coins, for currency notes. There's a very interesting fund out there which is called the wine fund. Now this fund obviously was never in India. We had a fund, wine fund, where we had the opportunity to invest. This is way back in 2007, 2008. I was a part of a French bank. I was heading the business of the French bank in India. And we had offered this wine fund basically because the bank was French. There are a lot of famous wines in France. And the thought that came out was, why not have a wine fund? You'll all, of course, remember that before the global financial crisis in 2008, equity markets had done very well. Indian equity markets, global equity markets, US equity markets, all of them did very well before that. But we had this wine fund which gave returns significantly higher than an equity fund. Now, all of us would tend to believe that equity gives the highest returns. Many of us would also believe that gold will give fancy returns depending on which time frame you're talking about. But we had a differentiated product which was a wine fund which gave a fancy return. Now, you had a lot of art funds also at that time in India. There were about 6 or 7 art funds where they would collect money and invest in paintings. They would invest in art. They would invest in collectibles, in antiques. And all of these were actually illegal. The SEBI did not approve of any of these because they were collective investment schemes, which was when this AIF opportunity came about, AIF regulations came, and you had a fundraising opportunity for startups, venture capital funds, early stage funds, social venture funds, private equity, debt, non-traditional assets that were there, fund of funds, hedge funds, pipe funds, all of these kind of funds that did not have legal sanctity at that point in time, got legal sanctity in terms of being able to do that fundraise after 2012. I was talking about the fundraise that they've had. In the last first 2 years, nothing happened, but in the last 10 years, 10 lakh crores have been collected. We are just talking about the kind of, and this is only wealth of the HNIs, mind you. We are not even talking of the middle income or the guys at the lower level who are investing in mutual funds. That's the kind of wealth that we are talking about that has come about in India in the last 10 years itself. Close to, when we are talking of 10 lakh crores here and about 50 lakh crores that have come about in the mutual fund industry and some more in the portfolio management industry, and of course the kind of trading that has happened and the investments that have happened through FIIs and all of that in India. There is that huge 1 crore opportunity that is there. That's a trillion dollar opportunity that is there to participate not as traders, and we are looking at it purely from a trader and investment point of view. Think about it. We need to look at that large opportunity size in a very different way in how we can participate and create wealth. Everybody out there is creating wealth for themselves by investing in all of these. Are we creating, as practicing chartered accountants, wealth out of this large wealth created opportunity that is there through participating, not as investors maybe, but also as ways in which we can practice? Of course, where we can participate is within AIF is, like I said, this is just a small example that I wanted to give on AIFs. The similar opportunities there in mutual funds. I was told there's a mutual fund session tomorrow, so I should not be covering too much on mutual funds. But the same opportunities there in portfolio management, in the entire capital market, in the entire financial services. We are not, when we talk of capital market, that's one small segment. There's a whole financial services segment which has, again, a further multiple opportunity that is there. Whether it comes as merchant banking, whether it comes as investment banking, a fundraise, IPO fundraise, rights issues, tons of it. So obviously we need to have that fund structuring and compliance skill set that is there. We can do valuation services. We can do due diligence that is required. A lot of banks get into due diligence. We've heard of a lot of banks needing due diligence. Increasingly, this will become more and more important. All of us do end up doing a lot of bank audits, but that's restricted to some internal audit, some concurrent audit, some stat audit of some branch of some bank, of some maybe NBFC. Please remember that given the kind of RBI compliance regulations that are coming about, all NBFCs and a lot of banks will need incrementally large compliance requirements that could be there, where we could play a role in due diligence beside a lot of the other audits that we actually end up doing. Of course, you have regulatory compliance that is there and financial audit and reporting. With that, I conclude my session with the hope that at least I have left some thoughts in you of how you can participate in this entire wealth creation that has happened within the country over the last several years now. Thank you.
Is your questions?
Sorry, could you repeat that? What is the main reason for?
Main reason for Sensex down.
Sensex being down.
Why indices are going down? That is what he's asking.
Well, I think it's for all of us to probably know, being, as we are aware, globally there are a lot of, on the one side, geopolitical issues that are there. On the other side, there are a lot of tariff issues that are there. So ever since a new president has come in the most powerful country and who has started putting tariffs on all countries, who's initially put it in all countries and then now gradually changing it or reducing it for different countries and gradually diluting. But what happens is when these kind of announcements are made in terms of tariffs or potential a restriction on how goods would move about, please remember that businesses don't like uncertainty. Businesses thrive on consistency of regulation and for the law to remain as it is for several years so that they can take decisions. A business decision in terms of a manufacturing ability or an investment that you could make depends on a lot of large investment that you do. And that investment, you're going to visualize your business for the next 5 years, 10 years, and you're going to make that investment. If there are these kind of global announcements that come about where, let's say I set up a toy factory in India, in Bhubaneswar, and you have all of a sudden, you have an announcement which comes about that toys from India will attract 100% tariff. Your business is going to come to a standstill. So when you set up the factory, you set up with the thought that the market is going to grow, it's going to really thrive. That's what China did. They started manufacturing toys when toys were not at all really a serious business across the world. They were, in India, they were just the unorganized sector. There, they created into an organized sector. They created into a large industry. 80% of the toys manufactured in the world are manufactured in China. So when you have that kind of investment that is required, you look at long term. And when these kind of uncertainties are created, businesses are not going to invest. When industries don't invest, you don't have a future visualization of how growth can happen in a particular company or in a particular industry. Let's say there's an open tariff against whatever, pharmaceutical industries. And they say that all imports of goods, all pharmaceutical companies in exporting to US from India will attract a 50% tariff. That increases the price of goods. The same quantity is not going to be any more sold in the US. You will not be, a business from here will not be able to export the same quantity of goods. So your business has collapsed. If your business has collapsed, if there's uncertainty, I'm not going to make any further investment. So there's no visibility of earnings growing or revenues growing or growth happening if there is business uncertainty. When there is business uncertainty, when there is a supply chain issue, we are talking of, let's say, an automobile industry in US. An auto industry in US is not, if it's manufacturing cars, it's not just buying everything within US. Please remember that it has an engine, it has a seat, it has a steering wheel, it has a dashboard, it has a lot of electronics, it has a brake, it has an accelerator, it has a fuel pump, it has tons of things of plastic, metal, all of that gets sourced from around the world. The moment there is that kind of an uncertainty of imports or exports going cross-border, you're going to see trade coming to a standstill. Even companies within the US, which are, so that when that supply chain becomes an issue, when you have a question mark on how am I going to source my steering wheel of my next American car from India, you're not going to be able to manufacture cars. So your own country, your own industry slows down. When that kind of an uncertainty happens, obviously global capital market, global stock markets are going to get affected. And that's why even India has got affected. India might not get so severely affected because a lot of the consumption happens within the country for a lot of the goods manufactured. The export market is not huge, it is important. It's not the way China is dependent a lot on exports, both on exports as well as on domestic consumption, but China is big in exports. India is not so big. But then if global growth slows, obviously there are a lot of companies in US or Europe which are buying goods from India and to whom Indian manufacturers are exporting to, they're going to have a slowdown. So obviously when there is uncertainty, capital markets, stock markets come down.
So Microsoft has given an earning growth of 18%, and they have said that around 20% of their codes were written by AI, and by 2030 around 95% of the codes will be written by AI. If that happens, what will be the impact on employment and economy, world economy?
So, I think there was a reference to this when earlier speakers had also mentioned about how AI could impact jobs and have an impact on how business would be run. My sense is it will only change the way business is run. It will not, if it will affect a particular segment of jobs that might be there which are doing the same thing that AI is now going to do. But then fresh jobs will come about for AI. Fresh jobs will come about how to create AI, how to program AI, how to make it better. Newer skill sets will be required. Just the way when before IT came, before let's say Microsoft came about and started making all their softwares, or it started doing Azure, and it introduced Azure and cloud compute, cloud storage and all of that. Before that, a lot of that didn't exist. Those jobs never existed. But it's the newer technologies that create jobs and newer skill sets. I think once you have, it's the same as what we do in the CA practice. Unless we have newer skill sets that get created, the new opportunity is not going to come about. The same goes for AI. If the skill sets that are there today for programming that Microsoft does probably will need to be reskilled and used for alternatives. But GCCs, for example, were very small 10 years back. Today, GCCs are everything. Every company wants to set up a 5,000 member and 50,000 member GCC team that is there. It may be in India, it could be for catering to the whole world. But that's the different skill set.
But they will be requiring only AI professionals, not others.
So it's essentially for Microsoft would create alternate businesses which will require alternate skill sets. They had just the programming business earlier. They created the cloud business that was there. I'm sure the AI business and how it becomes, it could be either subscription based that creates revenue. One is the revenue part of it. The other is the job part of it. It's possible it could have less jobs, some part of it which AI could create. But there will always be also jobs of how to improve that AI. We've already seen the fourth generation chat GPT that has come about. We've seen Grok, which another AI format, which I'm told, or which when I use, it's way superior than even chat GPT. So the question is to create that next large opportunity that could be there. For all you know, and there could be an even more evolved version of how, not just an AI version, but a product which could be something which further creates AI, or which AI can create into something else. Just the way where we had Microsoft and we had the Windows software that was there, and we had computers that were there, desktop computers, then laptops came about, then iPads came about, then mobiles came about, all of which anyway require the Microsoft or MS Office that could be there. In the same way, there will be newer products, newer skill sets, newer revenue generating opportunities, whether it is Microsoft or you look at the results of Microsoft, fabulous results it came out with.
In person.
Any other question?
Sir, so who can create a real estate investment trust, and what is the minimum amount of investment required?
So in India, there are just 3 or 4 REITs that are, we're talking of REITs, which was referred to here, which is Real Estate Investment Trust, which essentially invests in commercial property. It could be it can invest in residential property also. So essentially, it's a mutual fund for real estate. So good, interesting product for all of you, or many of you who want to invest in fixed income products. Both REITs and InvITs, which is infrastructure investment funds, are great opportunities to invest, with some of them offering excellent returns. But the opportunity for REITs, I would think, is huge. It's simply huge. What does it depend on? It depends on 2 legs of it. One is the extent of investment that it can collect, and of course, the basic underlying, which is real estate. Given the size of the growth of the real estate market in India, extremely large opportunity both in terms of commercial and residential real estate. In real estate, again, you can, these are, for those who don't know, these are yield-based investments, investment trusts that are there, where they would, a trust would lease out real estate property, commercial property, let's say office property. It would own that property, lease it out to others, to outsiders, and get a fixed return, the rental return that each one of us gets. And that's passed on to the unit holders. So, and there is not enough funding that's available. These are sources of funding for the real estate industry. And I'm sure, yes, there is a great opportunity out there.
And what is the minimum amount of?
There's no minimum amount. These are units that are listed on the exchanges. You can buy them on the exchanges, sell them on the exchanges. Each unit is just one share or one unit. So, but I would share with you that, again, for those who are looking at fixed income investment, again, these are great opportunities.
Thank you, sir.
Thank you, sir. Is there any other question?
I'll repeat a question. What is the minimum investment?
Manojji, please use the mic. Manojji, please.
I'll repeat a question. What is the minimum investment required to create a REIT company? Float.
Create an investment company.
There's no minimum requirement. I don't think there's one. You can create a REIT. You have 3 or 4 REITs that are there currently. They're not offering a great return, 6 or 7%, but each of them have been created by some of these institutions, but there is no minimum limit that is there. You can create it out of a 10 crore fund.
So this is not like a venture capital company, where
It's-
there is a minimum requirement is there.
See, the important thing to understand when you're floating a REIT is you need a bunch of assets. You can't own one asset and claim that I'm getting rental out of that and let me offer these units to investors. You got to have a bouquet or a basket of assets. Those baskets don't come for anything less than 100, 200 crores. That's the rock bottom. You have a commercial building that is there. Any commercial building will not be worth, of some substance, will not be worth anything less than 100, 200 crores. So you can theoretically have a 10 crore fund, but you'll not be able to buy, except maybe a small office in Bombay and lease it out and have that as the only asset.
Thank you. I believe there is no further question. Good evening, esteemed members. Thank you, Nipun Mehta sir. Speech was very interesting and very insightful. You covered so many opportunities which are available in and around the capital market. So many opportunities starting from, let us say, from mutual fund to wine fund, whatnot. Almost everything is covered, investment, risk analysis, so many kinds of analytics. I don't think anybody else can connect all these dots the way, beautifully you covered. We are extremely thankful to you, sir. Now, I request our past chairman and senior member of the profession, C.A. Arun Kumar Verma sir, to come to the dais and honor C.A. Nipun Mehta ji with a memento. Sir, this is an artwork made on palm leaf. This is one of the craft of Odisha. So this is an intangible asset. Thank you. Thank you, sir. So before we end our session formally, let me announce that tomorrow there will be 4 very interesting, very beautiful sessions. First session will be on financial services and investment banking, and complete session is dedicated for that. Next session will be globalizing CA profession. Third one is about future trends and prospects available in UAE. Right. Right. Fourth session will be unlocking opportunities in mutual fund. These are the 4 sessions we are having. And you must have guessed there is one interesting event tomorrow, that is a lucky draw. You can draw your surprise coupons today and tomorrow also. So with this, we'll be concluding our today's session. I'm requesting all of you kindly tomorrow be available in this hall before 10 a.m. We can start the session in time. Yeah, this award will be given tomorrow. Lucky draw, that will be drawing it tomorrow. Award will be given tomorrow. Thank you very, very much. Yeah, and one more condition. To get the prize, one has to be physically available inside the hall. Thank you, participants.
You can drop your lucky coupon in the box kept left side of this right side of the stage today or tomorrow also.